Good Monday morning to you. My name is Matthew Buckley, coming to you from Wealth Creation Investing, where I am the Chief Financial Strategist, and I have a lot to talk about today. So let's get started. First thing I want to talk about is, if you're new to investing, is the various sources out there that you can use to help you make some intelligent decisions in your investing. One of them has got to be the Wall Street Journal. Now, again, don't get paid to plug the Wall Street Journal. It is part of my morning routine as an investor, as a trader, to read the journal from cover to cover. Additionally, over the weekend, I read Barron's. Now, Barron's is a once-a-week publication that comes out over the weekends, and it's just chock full of great financial information. Again, not paid a commission at all by these guys, but this is just some of the tools that I want to share with you as an investor that I use to really get up to speed with what's going on in the market. What is going on in the market? Well, both Barron's over the weekend and even the Wall Street Journal, I thought this was an interesting headline. Investors dip into riskier waters. So what's the overall strategic mindset of the market right now? It really is like we're opening the door from our nuclear bunker and peeking our head up above the trench and saying, okay, well, I guess that wasn't so bad, looking at this vast nuclear destroyed landscape. Well, folks, as the journal is saying, investors are dipping into riskier assets. It seems like the threat of Israel going to war with Iran has abated. I disagree, and I know for a fact, talking with many of my buddies that are still squadron commanders in the United States Navy out operating in the northern Arabian Gulf, they're like, Wiz, it's worse than what's being reported in the media. But so just general, again, the market's got a 30-second memory. If it happened a month ago, that might have, it's like dog years. It might have been 7 years ago. So that attack risk has kind of abated. We've seen some unemployment numbers actually get better or start to form a little bit of a squishy foundation. Let's just call it wet cement. Central banks, the Fed chairman, Ben Bernanke, has said, hey, I'm going to keep monetary policies low and do whatever it takes to, make sure. He doesn't trust the job numbers, which I don't either. So I agree with the Fed chairman in that respect. But keeping interest rates low for this amount of time can result in inflation, which would be a bad thing and really hurt our economy as well. The European zone issues, from Greece to Spain to Portugal to Italy, seems to have, and I've used this term repeatedly in some of my columns on seekingalpha.com and thestreet.com, that we've really kicked that can down the road. There's hardly a can left. But investors are starting to believe that maybe the world won't end. Greece technically defaulted on its debt, and people kind of shrugged. Market moved a little bit, and there we went back on our buying binge. Now we're hearing about Spain, and there were some national strikes in Spain last week, and Italy, and Portugal. We're hearing of other potential Greases, so to speak, but it really doesn't feel like the market is taking that into account. So, folks, if you're new to investing or you're a savvy investor, these are words to live by. Don't fight the tape. What's that mean? Volatility is low, and optimism is somewhat, it's muted, but it's actually high compared to where we've been. I mean, we've broken grounds not seen since 2008. These market highs. We're just about 900 points short of a 2008 high. So people are starting to party like it's 2006 again. I got to tell you, it's not. In this investor's opinion, it's not. I'm going to trade this market as if it is, but I have one eye towards the door. I'm ready for somebody to yell fire, and my folio is set up accordingly. If you're not hedged, this is how WCI is going to help you, the average retail investor. Most retail investors see the market go up And around this time, they start getting in like, okay, well, I guess I can pull my money out of the backyard where it was earning more interest than my local bank. And maybe I'll get back into the market. And then the world ends, and then you get hammered, and you wonder why that happens. Well, folks, and the rich people or the heavies on Wall Street just seem to keep on going. That's because they're hedged. One of the positions we have in a model portfolio I manage for a WCI company called Top Gun Options is a trade that is bullish long-term on volatility, meaning we think it's going to go up, but short-term bearish. So you can actually have two opinions in this market and make money both ways. That's the beauty of investing. That's the power of investing. You should not be, if you're new to investing, just bullish or just bearish. Because, and we'll get into this as you watch more WCI videos, there's something called a pairs trade. As something goes up, there's another industry market stock that tends to go down. So you can either do a pairs trade on something, or you can actually employ options as well, as we are doing at Top Gun Options with a trade on VXX, which is a derivative of the VIX, which is the volatility index. If you're new to options, that's what that is. And the VIX is kind of the altimeter, if you will, the fear gauge of what the market's seeing, and it hasn't been this low in a long time. As I said, I manage this portfolio for Top Gun Options, where we are up year to date over 20%, about just over $11,000 in our model portfolio. And so we're feeling pretty good. We've outperformed the market. It was a great first quarter, folks. Don't get me wrong. But our primary model portfolio at Top Gun Options actually beat the S&P, the NASDAQ, and the Dow, outperformed them last quarter. And how do we do that? We do that by being hedged. Not all in on being bullish, because guess what? I guarantee you the time you push your all in on the table is the time the market turns. It's just that's the way it happens. I've been trading for nearly 2 decades, and that seems to be the trend. So it's almost, hey, do me a favor, tell me when you're going to put all your chips in, because that's when the market's going to crash. So don't let that happen to you. So make sure you stay tuned to WCI, to our website, wealthcreationinvesting.com, where we're going to be bringing you the best in equities, options, futures, and Forex videos to help you, the average investor, the average trader, even the odds against Wall Street. And folks, if you haven't opened a paper trading account by now, and you're new to investing, I strongly recommend you do. And a paper trading or a virtual account is, you're not risking any real money. The broker gives you $50,000 or $100,000 and call it monopoly money to trade with and to learn. That's what you need to do before you put any real capital at risk. And before you put any capital at risk, you definitely have to talk to a registered investment advisor, certified financial planner, or registered broker-dealer, because none of the folks on the WCI site, none of the authors are actually registered investment advisors. So you have to go out and seek that professional information on your own. But we're going to give you knowledge. We're going to give you some training to help you out there. So you can actually go to trademonster.com/WCI and open a free paper trading account. So that's all I wanted to talk about this Monday. Make sure you check back to the WCI website for more free videos on investing and trading in the various markets. And like I said, yeah, we just peeked our head up out of the bunker and said, hey, yeah, it is all clear. But we're looking at a devastated landscape, folks. So here at WCI, we're going to potentially help you make money in this new world. So Matthew Buckley, the Chief Financial Strategist here at WCI, saying have a great week, and I'll see you for Friday's debrief.